We have a huge week in the market this week, full of catalysts. We also have some technicals to watch, including something very critical for Tesla, and I'm going to talk about it. I am Dr. Stock, Doctor of Education, and isn't it odd that for expressways, when they end, a traffic light can cause heavy traffic? You know, I feel like my delivery was off on that one a little bit, but I'm going to keep it in this video because I want to get into the important information that I have for you. So first, I'm going to put up the economic calendar. We'll take a look at some of the things that we have coming up this week, including inflation data and also some Jerome Powell testimony. And then we'll get into the technicals, including Tesla, but I'll also give an update on Nvidia, Enphase, Bitcoin, and the overall markets. So here we go. We got trading economics here, consumer inflation expectations coming out at 11 a.m. today, and the forecast right now 3%, whereas previously it was at 3.2%. So we'll be watching for that. Consumer credit change. Consumer credit is something that's a hot topic right now. This usually comes out of the New York Fed, so we'll be watchful for that to see the credit change that we have and be aware of any sort of spikes that we have in consumer credit. Moving on from there, tomorrow, 10 a.m., Jerome Powell testifies in front of the Senate on monetary policy updates. The semi-annual event that takes place. This could be huge for signaling to the markets which way to go. And I will say, even though IWM isn't something that I'm necessarily covering directly in this, that it is in consolidation right now. It tracks the Russell 2000. We are waiting for those rate cuts to take place, although I have a feeling that there could be a bit of a dip before we have a spike. But we'll watch and see if that happens at all. So that's for a future video. For the meantime, right now, let's move on to Wednesday. Also at 10 a.m., Jerome Powell speech coming out for us. And then into Thursday, we get the CPI numbers at 8:30 a.m. That's going to be absolutely huge to watch. I believe that fuel prices were down across the country for June as opposed to what they were for May. That can be a vote up for it. Also, what we had the previous year from May to June was a modest increase as well. So it is possible that we come in with some pretty favorable inflation numbers. And so we'll see if we keep on pushing down this 3.4%. Watching that hold steady as consensus, not bad for us. Watching that go down even further is bullish for us. And then we'll be watching those month-over-month numbers on a core basis as well. That can be also very, very telling for us. For the numbers that we get out of CPI. Initial jobless claims also coming out. We want to watch and see as that creeps up. It has to creep up a significant amount from where it's at right now. Honestly, the unemployment numbers are going to be where we see, I'm going to say at the beginning of August when we get those coming out for us along with non-farm payrolls. That's going to be an even bigger catalyst than these weekly initial jobless claims we get, unless we get some amazing surprise to the upside on that one. And then as we move on, we get PPI numbers on Friday this week, and then Michigan consumer sentiment. And I think that this is also going to be very critical to watch because one thing, if we're going to see a recession at all, one thing that can signal that recession is consumer sentiment itself. That if the consumer, if their outlook starts to really sour on the economy, that can be something not necessarily all that good for signaling the spending habits of those consumers, which make up about 70% of U.S. GDP. So those are the catalysts that we have coming up this week. And also big bank earnings start on Friday this week. So we'll be watchful for those as well. And the biggest thing that I think that we want to watch for the big bank earnings is how much they've experienced for the debt defaults. And then also how much are they putting down for debt defaults. They're earmarking for the next quarter for those debt defaults. I think that can be a very big signal to us. And, especially where commercial real estate is involved, although I think it's going to be more on the consumer side. For the big banks, regional banks, watching what they do in preparation for what they've experienced in the commercial real estate side of things is going to be huge for us. We know the stress tests happen by the Fed and the big banks, all 31 of them, passed with flying colors. However, it's the regional banks, which have the large exposure to that commercial real estate, and they don't undergo that same stress test. And so that's where some of that trouble can come in. So the regional banks that report later, I think are also going to be very significant to watch. It can be signaling to the markets as well. And then, we'll talk about Nvidia when we get there, but I will say that the big tech that reports towards the end of July is going to be critical for signaling what's going to happen with Nvidia. So with that said, I think it's about time that we get into the charts. So let's take down the economic reports and let's put up the charts instead. We're going to kick things off with SPY to see where the S&P 500 ETF is tracking right now. And in the pre-market hours, we're actually pushing up above this. Now, what you see for these trend lines, this one trend line that's a little bit less steep going across here, this is a very critical trend line that we have. And the fact that we broke out up above it is a very strong signal for that bullishness that we have. We are in overbought territory on a daily basis. And if we drop out to a weekly basis on this, you can see a little bit more of a shape, still overbought on a weekly basis. And we go out to a monthly basis, we are just barely tiptoeing just above 70 on that. So you can see the rising wedge pattern that we happen to be in right now. And that is something that if we break down below this lower trend line in this smaller little wedge that you see right here, that's something that could signal some near-term bearishness. Now, what should you be watching for on a daily basis? Honestly, it's this 20-day that we keep on having it as support for us. It was broken down here. We had a significant sell. We found this bottom trend line, and that pushed us back up over that resistance of that 20-day moving average in the middle of the Bollinger Bands that you see on here. But for right now, that is what we're looking for that area of support. So for that next bounce that comes along after the next sell-off, right now it looks like it could be this trend line that we have here at the top. We'll see if we push up high up above this one that's in the rising wedge pattern, because if so, that's another signal for further bullishness. Then we're looking for where that top of the Bollinger Band is. QQQ. Now this one, a little bit different for us in the near term. Yeah, we're in a rising wedge pattern. We did break out at the top of it. So what's the next thing that we need to be looking for in terms of where we're going to go from here? Well, big tech, I think, is going to be that next influential moment. Do we get a drawdown leading up to that big tech? It's possible. We are getting some steepness on this chart. If we look across the bottoms of these, we need to stay up above this trend line that I just drew on here for you. And if we come back down and retest this, we could find support there. If we break down through it, again, we could have a bit of a sell-off. We're gapping significantly over that 20-day moving average, which is right here, this thin beige line that you see coming up through here. That would be the one. Actually, it looks like the pink Himalayan salt that we use in my household. But that 20-day moving average is one of those areas of significant support that we look for if we get that sell down. Now, mind you, we also have this trend line from the rising wedge to look for support. And then we have this very critical support, much like we did for SPY, which is down near the 20-day, which would be around the 450s to 440, mid 440s. For support, that's if we get that sell down. For right now, we have a fair amount of green lights with some reservations that are out there. I think that this is a time where if you have significant gains, that there's different things that you can do to take advantage of that. If you have lots of 100 or more shares of different companies that are out there, you can sell call options, for example, and you can set those to be with strike prices high enough out of the money where you can harvest some premium off of that. And you can even do so as short-term expiration dates. Just not an idea out there if it's something you don't necessarily want to offload shares of your position, but then that also comes along with opportunity risk, for example, or opportunity cost that you would say in the event that some of those stocks that you enjoy so much push way beyond or up above that strike price that you were initially expecting it to stay below. But let's move on from there into Bitcoin. Bitcoin, the important thing I want you to see, I took away all the drawings, all the other technicals besides what you see here for the 50-day and the 200-day. We need to retake that 200-day if we're going to see further bullishness for Bitcoin. If we don't see that push up above that 200-day for Bitcoin, we could get a further sell. It looks kind of bear flaggy that we have right now coming out of this. Now, mind you, where do we find the buyers coming in? The buyers are coming in below $56,000. It looks like when this thing dropped down to about just under $54,000 per BTC that those buyers came in. And then, so for N phase at the bottom of the range, feeling a little bit of recovery right now, having some trouble near $100 per share. We do need to break back up over $100 per share in order to recover on this one. And we had a bit of a sell down from the top of the range up here around $140 per share. And we certainly weren't helped out by the drama happening following the debate. And so I'm not going to get into that in this video. I covered it in other videos, but this is one that we do want to watch for some small recovery to come out of here. We do need to retake the 50 and 200 day. We had our golden cross moment. It was beautiful, but it was very short-lived, had a significant sell down. And if we do happen to sell down below the bottom of this range, which is about $95 per share, the significant load zone that I think that we could experience around $75 per share for N phase and solar stocks in general. And this really does move along a lot with what we see in TAN, the ETF that tracks solar as well. All right, I'm getting to the showstopper here. I'm getting to Tesla in a moment here. So this is the previous technical that I had on here. I wanted to just bring it up here because I didn't want to just like ignore it and leave it out entirely. But I didn't want to show you that I said that there's a possibility for a head and shoulders. Now, mind you, we've had significant price changes since that time that I think are refuting that as this right shoulder starts to elongate out here. And I think it changes a little bit of the analysis that I put on here. So we didn't have confirmation at all. That you'll notice that confirmation was below this line that I have on here at about 118. Just couldn't really break it, and that's okay. I'm looking for further buying opportunities, but it looks like that opportunity is not right now as a long-term investor in Nvidia. So let me remove that, and we'll take a look at what we have going on right now. And it looks like on a daily basis that we have a slight trend upward of the prices, that it looks like there's a line that we can't quite get over that's right across the top of here. So it's important that we break up above that for further bullishness. And then we also have the prices that are down here as well. So sort of a sideways trade, little bit of a bullish bias that's to it, and that's to be understood, are very understandable with a company like Nvidia that's leading the AI race right now. Some of the doubt coming in, I think big tech is going to be that huge catalyst that we have with their earnings, that we want to hear about further purchases from Nvidia, as Nvidia won't report their earnings until later in August. So we want to be on the watch for that. We want to be on the lookout for that. I still think that below $100 per share, if we see this turn into a 2-figure stock instead of a 3-figure stock, that sets up for significant opportunities, and that we look for where that bottom should happen to come in. I don't know that would happen anytime soon, but if it does, I'm here and I'm ready for it. And so this is the daily chart that we're looking at right now for Nvidia. And why don't I see, where's my 200-day on this? There we go. It's so far below the 200 days, all the way down here at $73 per share. The 50-day that we have on this is at about 108, 109. And that's also where we see some of this different price action that's in here. And so if we do draw it down, if we break down below the bottom of this little range-bound sort of bullish channel that we're in right now, that's at about 119, 120. If we break down below that, we could start looking for support at these 50 days. The red is the EMA, the exponential moving average. Blue is the simple moving average. All right, now for Tesla, the big thing that I want you to see on Tesla is that today could confirm a further drop if this candle that we got at the top of this is called a hangman candle that you see up here at the top of this, and you can see that we have that narrow body and we have a long bottom wick that's down here that's more than twice as large as what we have for that body of the candle right there. And I have right here that it's confirmed by the next price drop. I think that we could get a possible retest off this bottom trend line. So we have a setup right now for a potential for a near-term drop in Tesla stock price, which I think could set up for a significant bounce from there. And then remember, if you've seen my other videos, I do have that $300 stock price prediction by August the 8th, which is when that full self-driving / robo-taxi day would come along. And so we're going to be watchful for that. I think there's going to be a lot of hype and anticipation. Now that does assume that the market stays relatively about where it's at. A significant sell down in the market would disrupt that price prediction that I have. And that also assumes that earnings come out positive and that we have some positive news to look forward to coming out from Tesla during that earnings call. So we still need some things to align in order to hit that $300 price target. We got number one was the deliveries themselves, surprise to the upside. Excellent. Now we need the earnings to come through for us. We're going to see how we treat that. Earnings could be enough if received positively to push us up to that 300. And then I do think that we're going to have a significant sell the news event wherever we peak out leading up to that full self-driving day. I think that we're going to see a significant sell the news event take place, and that if we hear something wildly positively received on that day, that's something that we could pop up above. So just so you know, a few other things about the hangman candle that I want to bring to your attention here is that we do have higher than usual volume over the last 4 trading days, I would say. Maybe you can even include, I'd say 4 is a good number. And then it is overbought significantly on the daily chart. And so that's something else to pay attention to. We do want the bulls to take a little bit of a rest, that if they rest now, that this is something that can de-risk any position that's taken in the near term. This is confirmed if we get a lower candle over here. If we open lower and continue to sell off that red candle today, could be that thing that could confirm that further drop and confirm the hangman candle that we have here. And like I said, look for a significant support to come off of the retest of this trend line, because this trend line comes from a monthly chart that goes about 2.5 years back in time. So this right here, very important for us not only to break, and that's why I was so bullish on it when we did finally break it, because it went all the way back to November of 2021. November of 2021 is when we had that first start of it, and then it turned into a top trend line by the time that we got to July of 23, and then we got our third touch on the bottom of this thing going all the way back to the 1st of April, setting up for this wonderful consolidation pattern. We broke to the upside on this one. We're above the 50-month, and so very bullish territory, especially for the RSI. We're also up above 50 as well. So there's a lot of factors that we have that play into that $300 price prediction that I have. And like I said, it does take some news from Tesla. We have some catalysts coming up that could impact that significantly, and I just wanted you to be aware of it. As far as trading the Hanging Man candle, if we get that confirmation, the stop would be up above the high price for the Hanging Man candle. And then the take profit would be where you see that bottom start to come in with the price start to inflect back up. You could take that profit around this trend line, as I think that that would be significant support. Not financial advice, just ideas that I'm putting out there. Do your own research, read about the Hanging Man candle pattern. Let me know what you think down in the comments of this video about anything economic, anything Tesla, Nvidia, Enphase, Bitcoin, whatever it is, you name it. I would absolutely love to hear from you guys. I hope that the information that I brought to you has been very enriching. If you'd like to see what I buy and sell and how I play these markets, you can do so using the link in the description for the Patreon. Come over and join me in the private Discord that's over there. See the buys and sells and be part of an exciting and growing community. And then also down in the description, you'll find a link for a technical analysis trading course. If you learn to empower your portfolio through technical analysis trading, you can do so by using that link. Easily digestible information, a very clean and succinct PDFs that are out there, videos to accompany it. And then I also have a chapter in there on options if you want to get started on options trading and really learn to amplify the power of your portfolio through options trading. Like I said, that's also there as well. Thank you very much, guys, for watching. I really do appreciate it. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.